All right. Good morning, everybody. Oh, come on, office closet door open. Give me 1 second. All right. Now we're here. Good morning, everybody. How we doing? Hope you had a beautiful weekend. Andrea, Benjamin, Paul. Good morning. Good morning. Happy Monday. Here we are, blessed as we can be because we're faced with another full week of opportunities to do what the daring only dare to do, which is close the gap between where we are and where we want to be, continuously push, get 1% better, and raise the bar, right? So we're blessed to be here for another week, blessed to go after it and challenge ourselves as human beings, right? As brothers, sisters, fathers, and everything in between, and rise to the occasion. So part of that is going to be preparation, and that's exactly what we're doing here with this session, is preparing for what the market will bring for us here this week. So let's go over, of course, what we have going on in the week ahead, but also our Monday specific news. Both are going to be very important. I also, let me see here what moves. Markets. Okay. All right. So we're going to check out what's important for the week ahead and then our Monday specific news. Both of those are going to be wildly important to our success here this week. Last week, we had a Fed week, right? We had Jerome Powell coming out speaking. We had a key interest rate decision on Wednesday. That's what the whole week hinged on. If you weren't here for Monday, Tuesday, you had no idea that we were going into Wednesday already bearish, and you likely didn't make any money off of the downside that we saw last week, which was the main portion of move that we got. So Monday is a very important day to be here. And you're already winning the battle if you tune in on Monday to get the lay of the land, the exposition of the battlefield before the war starts as we go into this week. So we're always trying to get 1% better. You want to set your intention to do that each and every day. You don't want to do it by accident. You want to do it on purpose. So make sure you put your one in the chat, comment that one stating your intention to get 1% better here throughout the day and throughout this session. Now, in terms of our top news here, inflation trends will be the key focus of investors next week. This is, from like Saturday. So we're looking to this week is what they're referring to, with the US PCE inflation reading and flash CPI reports from Europe due to be released. So PCE is the Fed's preferred measure of inflation. We have that being released this week. And then we also have key consumer price index reports from Europe. So we have inflation info from Europe, as well as PCE data from here in the US. Other economic reports of interest include updates on durable goods, consumer confidence, new home sales, and the advanced goods trade balance. Analysts think the overall balance of data releases could confirm a cooling economy. Core PCE inflation, also known informally as the Fed's preferred inflation gauge, is forecast to be up 0.2% month over month to put the year over year rate down to 3.8%. Earnings report in the week ahead include releases from Micron Technology, ticker MU, which is a semiconductor ticker, right? Semiconductors have been hot in the wake of the AI boom. Costco, ticker COST, COST. Nike, ticker NKE. And Jefferies Financial Group, ticker JEF. And in the tech sector, Meta Platforms will host its highly anticipated Meta Connect, and Huawei will hold a key product event. Energy investors will also be watching the Total Energies, whose ticker is TTE, Investor Day event amid a recent rally in oil prices. Now, oil, we actually made a good bag of money onto the downside last week, which I made a reel about. If you missed that, make sure you go check it out, right? Drop some fire emojis in the comments because it absolutely set our accounts on fire in a good way, blazing them up to higher and higher heights, which again, hopefully you withdrew by the end of the week. Start the week on a fresh slate. Market owes us nothing, right? And we just come ready to execute. In terms of other earnings that might be important, the only other one is really Carnival on Friday, Carnival Cruise Line. So CCL is reporting on Friday, but that's really the only other household name. Let's see here. Key events. Huawei will hold a product event for the media on September 25th. Analysts will be looking for details on the latest Mate 60 Pro 5G smartphone and the chip used. The last Huawei phone introduced used a chip made by China's Semiconductor Manufacturing International, which caused concern. In the U.S. National Security Advisor Jake Sullivan said recently that the U.S. needed to get more information on the precise character and composition of the chip powering Mate 60 Pro. Workday's 4-day Workday Rising Conference will begin on September 26th. The 2-day Code Conference, hosted by Vox Media, will run on September 26th to 27th. Notable speakers include ex-CEO Linda Yaccarino, right, Twitter, AMD CEO Lisa Su, Roblox CEO David Baszucki, Warner Music Group's CEO Robert. You got too many consonants in your name, Robert. KYNCL as his last name. And General Motors CEO Mary Barra. So those are kind of the important conference things on the schedule. Volatility watch, short interest levels are elevated again on Novavax and Wayfair. Options trading volume is higher than normal in Tilray and Relmada Therapeutics, whose ticker is RLMD. Now, we also want to check our market watch calendar, right, to make sure, because we know sometimes the Wall Street Breakfast newsletter can fall short. So we want to make sure that we've got everything accounted for here. So Monday, nothing really happening today, which is good. Consumer confidence data tomorrow at 10 a.m. That's important. That'll likely affect how we move at 10 a.m. That can affect price action tomorrow. Wednesday, we have a few things, but nothing important. Thursday, initial jobless claims. We also get GDP data, right? So both of those are important, GDP revision data. Then we get initial jobless claims at 8:30 a.m. So before Thursday, right, make sure anything you swing from Wednesday into Thursday, you recognize that we have that data coming. And then Friday is when we get the inflation data. So we get PCE index, core PCE year over year, all that good stuff. And then we also get consumer sentiment final numbers at 10 a.m. So that'll be important, right? We're really looking at Thursday and Friday being the most important days here. Tuesday, we've got consumer confidence at 10. So Monday, nothing. Tuesday at 10 a.m., we've got consumer confidence. Wednesday, not really anything. Thursday, jobless claims and GDP. Friday, PCE. So that can kind of give you the lay of the land. Make sure that you have all that factored in. Do whatever you need to do, right? Write on your little office calendar, write on a sticky note. Do whatever you need to do in order to make sure that you are aware of what's going on, right? Make sure that you know what's happening and that you don't forget, right? So if you need to set Siri reminders, Alexa reminders, whatever, right? Make sure you do that so that as you swing things and as you make trades and all that good stuff, you know what you're walking into and you don't get caught with your pants down, right? Now, in terms of, so does that make sense for the week ahead? Everybody throw a 3 in the chat if that makes sense for the week ahead. Yes, I love it. Great rising. All my kings and queens. Yes, Alicia, Sharon. Yes, Bull, Vivian, Detrice, Michelle, Daniel, my man. Good morning. Good morning. Like I said, we're getting into it. This is a very important session to be at. So I'm glad everybody is here. Because like I said, if you weren't aware of what we were going into last week, as I was talking about us seeing downside on Monday, Tuesday, you missed out on the big put party, right? Put profit party since we level iteration that happened on Wednesday and Thursday, right? Now, in terms of top news, deadlock continues. The budgetary standoff in the U.S. doesn't look like it will abate soon, raising the likelihood of the first government shutdown since 2019 as hardline Republicans continue to hold off on agreeing to a stopgap spending bill. Current funding for federal operations will end on October 1st. Which is less than a week away. If is that? Yeah, we're literally 7 days away from that. If Congress fails to reach a spending deal by then, thousands of federal workers will be furloughed without pay. That's no fun. Republicans divided. House Representatives Speaker Kevin McCarthy is expected, House of Representatives Speaker Kevin McCarthy is expected to push an ambitious plan this week, seeking approval of 4 large bills that include military and homeland security funding. The aim is to convince far-right Republicans to support a stopgap spending bill, also called a continuing resolution. Hardline Republicans want much deeper spending cuts than what was previously agreed upon, calling for about $120 billion in additional cuts for the new fiscal year alone. But U.S. President Joe Biden said the deal reached in June would have cut the budget deficit by $1 trillion over the next 10 years. Quote, now a small group of extreme Republicans don't want to live up to the deal, he said. Meanwhile, Republican Representative Tony Gonzalez pushed back on McCarthy's stopgap proposal, saying that it doesn't solve the problem. So this is just like classic partisanship that is, characteristic of democracy. It is how it is. Humans haven't found an effective way to govern since our inception, right? You have that joke going around on TikTok about how often men think about, ancient Rome, right? Ancient Greece, like all of them, none of them really found an effective way to govern and one that lasted more than a few centuries. And we're still there, right? So this is the downfall of the way that we govern, which is, democracy can be very slow, very tedious, very petty. And it comes to the detriment of the American people. So we're just in another, episode of whose line is it anyway, right? When we're just going back and forth about how much this will cost people, and all they're really doing in all this conversation is costing people. So wider impact, most experts believe the government shutdown will be temporary and its wider impact will likely be limited. According to Morgan Stanley, the last 20 government shutdowns that occurred since 1976 appeared to have limited impact on the economy. As for bond prices, a shutdown may cause some temporary instability, but this is not a given. Yeah, unless you see some type of ramifications in terms of price action, you pretty much just assume that this is not going to affect markets. It really hasn't been something that's affected them in the past. So we'll see if that ends up manifesting in terms of the charts, right? That's what we're watching. But otherwise, it's not like, oh, government shutdown, like we got to throw the mortgage on puts. That's not the case, right? Brian Levitt, global market strategist at Invesco, expects the spending bills to pass without incident, given that past shutdowns tended to resolve quickly with minimal impact. Seeking Alpha analyst Justin Perrowit also expects a last-minute deal, although the process will likely be messy, as it always is. Quote, though contentious, past standoffs have always proved temporary with little lasting impact on U.S. equity markets, he concluded. So, again, we have contentious standoffs, but they always end up getting resolved, and we really don't have much impact on the stock market. So this is kind of something that's important to keep an eye on if you're like a government employee. But other than that, they end up making a deal, whether or not it's for the good long term of the American people, I don't know. But they do make a deal, and it doesn't really affect stocks that much. In terms of media news, win for writers. The Writers Guild of America and Hollywood studios reached a tentative agreement Sunday night that set the stage to end a strike that has been going on since May. The writers' union said in a letter to its members that an agreement in principle had been reached on all key points. The final contract language still needs to be firmed up with the Alliance of Motion Picture and Television Producers, which represents major studios including Amazon, whose ticker is AMZN, Disney, whose ticker is DIS, Netflix, whose ticker is NFLX, and Warner Bros. Discovery, whose ticker is WBD. After that, the Guild's leadership and members need to vote on the deal. The tentative deal doesn't directly impact the ongoing actors' strike. So the Writers Guild has reached, a tentative deal, but there's still other steps that need to be taken, right? Other things that need to happen. But keeping an eye on those tickers, right? Amazon, Disney, Netflix, Warner Brothers, those will all be like right in the front of the queue as we watch, this week, because if they go through all the steps to get that deal, then they should start to see some bullish sentiment. And they are all tickers that have been beaten down over the course of the past week and a half, right? All of them, pretty much, or at least two of them, we've traded pretty heavily to the downside, which is Amazon and Netflix. Amazon and Netflix, we both roasted to the downside last week and really for the past 2 weeks. So, might finally be time to make money off the upside. And me, if there's opportunity, I'm a kangaroo. It's dumb to either be a bull or a bear. The market goes both ways. I'm going to go both ways, right? I'm going to go make money on the upside, make money on the downside. So we'll be watching Amazon, Disney, Netflix, and Warner Bros. Discovery for some bullish sentiment to possibly manifest. And if it does, right, as in the charts show us something that says there's opportunity to take advantage of, then we'll be on it. In terms of automotive news, over to Detroit. While progress has been made in Hollywood, Detroit automakers are still at loggerheads with union workers. The United Auto Workers walkout ratcheted up a level after the union added 38 General Motors and Stellantis locations. So these strikers, right, are bolstering their ranks. They're adding in more people to join them, which makes it even tougher, obviously, for GM and Stellantis. Now, their tickers, by the way, are GM and then STLA. Now, UAW President Sean Fain said talks with Ford saw real progress, but negotiations with Stellantis and GM remain problematic. Ford noted that there were significant gaps to close. S&P Global Mobility believes the UAW is ensuring it still has leverage by holding off striking at vehicle, engine, and components facilities. The White House is widely expected to step in, with President Joe Biden arriving in Detroit tomorrow to stand in solidarity with the UAW, he said. So, again, these are, other tickers that are on the docket to remain being monitored. We had a lot of stuff that was just outright bearish last week, so I'm going to take those looks over, anything that might be more so speculative, right? GM and these auto stocks, they've been on strike, but they haven't dropped as much as like QQQ or any of the other things that we've been trading. So there's no real need for us to look at it, right? So there's some times where it's like, oh, this inside scoop is helping, but then there's other times where you're just kind of, you might get obsessed with the fact that this is going on in the news, but what is like making you money in markets, and that is, what is chugging along technically, right? And when I say technicals, I mean in terms of the charts. What has the juiciest charts to bring you the juiciest profits, not just, oh, there's a strike going on, I'm going to get puts on these auto companies, and it's cool that I'm making money off of the news, right? Yeah, that is cool, but you want to be making more money off of the juicier plays. In terms of energy news, dodging sanctions, Russia appears to have succeeded in avoiding G7 sanctions on most of its oil exports, as Russia's oil revenues may total at least 15 billion more in 2023 than they would have previously. This is a result of higher crude prices and a lower discount on Russia's own oil. Nearly 75% of all seaborne Russian crude flows traveled without Western insurance in August, implying that Russia has become adept at circumventing the G7's $60 per barrel oil price cap. So basically, somebody out here is capping on the fact that they're placing an oil price cap on Russia's oil. Somebody's taking deals under the table for cheaper oil, and it's every country for themselves. So what can you really expect? Nearly 75% of all seaborne Russian crude traveled without Western insurance in August. We talked about that. Enforcement concerns have been mounting in the West over the price cap, with Russian Urals crude trading above $60 since July, while Russia's oil sector still faces issues, including a tight diesel supply. The latest trading figures suggest more oil revenues will be flowing into Vladimir Putin's war chest. Now, all this kind of goes on to speak to the fact that this conflict going on in Ukraine is a long-term conflict. We've talked about that since it began, right? And that has rung true, right? There are 7 in the chat if you've been here since that conflict rung out. And I was talking about how this won't be a 2-week, 3-week thing, and it's going on to be, a more than 1 year thing, likely, and unfortunately, a multi-year thing. And really, the U.S. just doesn't have as iron of a grip as it thought in terms of like regulating our allies or other countries to not take this cheap Russian oil. I mean, countries are struggling. Inflation is through the roof. At the end of the day, if it's you versus me, or if it's, you telling me not to do something and me having to survive, I'm going to do it. And that's where it seems like we're at right now with Russian oil. Now, in terms of today's markets, we're pretty red across the board. Let's see. Are we still roughly where we were at earlier? Let's check out on our buddy SPY. We actually might be slightly lower. So it looks like we were down like 0.1 earlier, might be 0.2 now. But in Asia, we're up. That's like the one place it's green. In Japan, we're up 0.9%. Hong Kong, we're down 1.8%. China flat, China down 0.5. India flat. The footy in London down 0.6. Paris down 0.6. Frankfurt down 0.7. The Dow down 0.1. S&P down 0.1. NASDAQ down 0.1. Crude oil up 0.1. Gold down 0.1. Bitcoin down 2% to 26K. Nothing important on the economic calendar, really. So we'll wrap up with our rapid fire bullet point rundown here. Apple to boost India production over 5 times to 40 billion. We've been talking about that nonstop, right? India, the new frontier. Everyone is moving out of China, moving into India. Thinking of buying a used electric vehicle, think very carefully. Thanks, I guess, for that. Bill Ackman sees 30-year bond rising to 5.5%, remains short bonds. Are updated COVID boosters really needed? Americans are divided. FTC lawsuit against Amazon may be filed as soon as Tuesday. I'm not really like super scared about that. Every big tech company faces ongoing lawsuits. Madison Square Garden, ticker MSGS, has no plans to sell Knicks or Rangers. GLP-1 drugs likely impacting demand for aesthetics procedures. Ken Griffin's Citadel Securities charged for short sale rule violation. And then once hyped NFTs are now largely worthless, demand at a standstill. And these analysts see industrial real estate picking up steam in 2024. So just try to plug some writers that they have going on here. But in terms of us going into this week, we saw a lot of selling happening last week. We've seen kind of continued and renewed downside sentiment. We want to be on the lookout for a bounce, right? You don't want it to sneak up on you. You want to remain ready to execute, but you also want to remain patient, right? So we had a number of good looks that panned out for us last week. We want to continue to take advantage of those high probability looks, but not force anything. So as we go into today, that's exactly what we'll look to do, as well as do that throughout the week. I do have an important announcement. Yeah, I love it. Seeing the interaction. Yeah, you guys have been here. You've been here for a bit. You've been here riding it down since the Ukraine war started, which is pretty wild. But in terms of this week, I'll actually be going back to my home house. My dad is out of town. My mom starts radiation. So I appreciate all prayers. She had 2 surgeries. She's now technically cancer free, but still has to do radiation for a month. My dad's out of town. So, firstborn, I'm going back home, holding down the fort, right? And I'm not sure exactly what my schedule will look like, but I'll be here for as much as I can. I really shouldn't be like occupied each and every day. I'll figure out kind of the schedule this week, but I'll continue to drop Loom videos, drop some analysis to make sure that you guys are still aware of the high probability plays that are going on this week. But just letting you know, as I said, when this whole process started, right, that I've got a lot on the plate, a lot on the schedule, and I'll work around it, right, in order to make sure that we're still getting everything done. But just a heads up, my schedule could look kind of hectic this week, which I am mad about, right? Family, love is action. So you got to be there in order to show that love in person. And that's exactly what I'm going to do. So excited to dive into the week, right? Let's dive into the day, make the day a great day. And I'll see you guys, God willing. Again, I got to check back here tomorrow for our next pre-market prep session of the week. Have a good one, everybody.